Hello fellow investors and welcome back to Borex Investing. So for today's video, I want to talk about Palantir and the current valuation and if this stock is still worth buying at current levels. I'll also include my 1, 2, and 5-year price targets along with potential risks involved with this company. So you may know I've been recommending Palantir on my site for about 5 years now. I've covered it extensively with deep dives, calling it a long-term winner before most people even heard about it. It's definitely been a game changer for me and other investors who were able to grab thousands of shares under $15. So Palantir had a great run up in 2024, and I mentioned that in my 2025 market predictions. I even shared the following comment I made to dozens of people in relation to its run up. When it was $8 a share, I told you to buy it since it was going to 100. Now that it's at $70 a share, does that change that it's going to 100? So that was my advice in December of 2024 when Palantir was trading at $70 a share. But how about now that it's trading at over $130 a share? Will it keep growing? Well, that's what we'll cover today. So since Palantir is one of the hottest stocks of the year, it's gathered far more attention. It's constantly on CNBC, Bloomberg, and other financial channels. So there's tons of Palantir bulls out there, but there's just as many, if not more, bears which think that the stock is totally overvalued. And really, it's not surprising to think that it's overvalued. You have to remember that Palantir's PE ratio is close to 600. That's extremely high and makes it seem like it's overvalued. For comparison, when we look at the PEs of other major tech firms, we see the following. The average price to earnings ratio for these tech giants ranges from 17 to 61, with most in the 30 to 40 range. So Tesla is also an outlier here, but remember they have higher growth expectations and that's what keeps its price to earnings elevated. But I mean, you look at this and you see Palantir, it almost trades at 600x, and that's far above the norm. So you have to take a look at this, step back and ask yourself, is this irrational hype or can it be justified with further earnings? So I've been investing for almost 20 years and I've seen a lot. And I recall a similar conversation to this one. And I recall seeing a very similar PE ratio to this one once before. And I think that that conversation was very relevant to what's going on today. So this similar story played out with Amazon. So as we saw earlier, Amazon has a PE today of about 35x, but we have to remember that about 10, 12 years ago, Amazon hit a PE north of 600. And that was when their earnings weren't caught up with the hype. So people thought that Amazon's high valuation was all about Prime and their consumer e-commerce, but that actually wasn't true. The real value stream came from AWS, Amazon Web Services. And that was because they were selling enterprise-level cloud engines to other companies, and that's what delivered lasting profits and justified their high valuation. So similar to Palantir's current enterprise offerings, AWS was very scalable at the time. So I think this is nice to look at. If we look at the split adjusted stock price of Amazon when it had that really high PE ratio, it was trading at about $14 a share. And currently it's at $220 a share, so it's gone up 15x since it had that crazy high PE ratio. So back to Palantir. Enterprise AI doesn't mean much without Palantir. Palantir sells the software that organizations need to purchase to reap the benefits of AI. See, the problem is that most analysts are trying to value Palantir like a normal software stock. But when we look at today's earnings, they're not factoring what it becomes once it's embedded into every enterprise's AI infrastructure. When companies need an AI control center that's secure, scalable, and modular, they go to Palantir. And just like AWS, it starts small, but once it's in, it scales across the entire org. And that is how you build $1 trillion valuations. All right, so let's talk about my price targets. So I think Palantir will be fairly flat for the rest of 2025, and it's going to trade in the 130, maybe to 160 range. So I personally think that commercial growth will explode next year with all the rate cuts. This will allow companies to borrow cheaper so that they can invest internally by spending more on R&D, cybersecurity, and tech upgrade projects like Palantir adoption. So I think this trend will continue for a few years as we have this environment of lowering interest rates. Years from now, Palantir will reach $200. I think by summer of 2030, they will reach that $1 trillion valuation and their stock will be trading in the $400 range. So 10 years from now, Palantir may be worth thousands per share if it continues on this trajectory of growing commercial success. So this company is currently the only software that gets value from AI. So I believe that they're going to become the next Microsoft. When you have companies on the S&P 500 saying that Palantir software made a process that used to take weeks, just take a few minutes, that's impressive. more corporates will start using Palantir software. But as with all firms in the tech space, there is risk. We have to remember that companies like Palantir work with sensitive data, a lot of data, and that's, defense, government, critical infrastructure. So any breach or misuse could spark legal, reputational, or even regulatory backlash. There's also a risk of disruption and technological obsolescence. So often the barrier to entry in software is quite low, so future new or more agile competitors can emerge fairly quickly. So they don't currently exist, but that's not saying that they're not going to exist maybe in 5 years. I mean, we have to remember in AI especially, innovations are rapidly moving. So Palantir must constantly evolve or risk becoming outdated like AOL, Netscape, or even Winamp. So there's also another risk associated with Palantir. We have to remember that this is a founder-led company. So Alex Karp is the founder and CEO. But we have to remember that nothing lasts forever, and he likely won't be the CEO forever. So if something were to happen where he wasn't the CEO anymore, it could have a substantial impact on their stock price. But we have to remember that investing always carries risks and that nothing is guaranteed. All right, so if you like this video, check out my other video on Nebius, ticker NBIS. I think this is a company which will grow exponentially in the near future. It is one of my high conviction picks, just like Palantir was a few years ago. So please like and subscribe if you found this useful, and visit borexinvesting.com for more stock market analysis. Thank you.